Welcome back, and you're watching Stock Picks, and today we're joined by Otwa Magwenchu from Tribe Investments to unpack ADvTech, Grindrod, and Bal Equipment. Otwa, a pleasure. Good afternoon.
Hi, how are you today?
Wonderful. How are you?
Amazing.
Fantastic. Let's talk about why these stocks. So let's not get into them yet, but is there a specific theme that we're seeing across these stocks today?
Well, a little bit. My theme is roundabout, unfound treasures, basically, and that's what I was going for. These businesses have been, having very good years recently, so I thought that that could also be an addition to it. Just to go counter by counter, looking at ADvTech, for example, the educational system has been growing quite aggressively across the board, and ADvTech is my winner in the educational sector. We're looking at Bal Equipment. That, for me, I think it's, they say when there's a gold rush, it always helps to be, selling spades and shovels, whereas they, sell for a large array of industries. And then finally, Grindrod. Yeah, I like them as they also addressing the port and infrastructure issues we're having in South Africa at the moment.
Okay, got you. I want to start off with ADvTech as well. I like ADvTech as a counter. It's a little bit of schooling, it's a little bit of a tertiary education, and they seem to really be milking that sweet spot, Otwa. Tell us about this counter.
Okay, so I mean, as you correctly said, ADvTech is education and university counter. However, they also look at recruitment services as well that a lot of people tend to overlook. The nice thing about this counter right now is that it's doing its expansion into Africa with countries such as Kenya and Botswana that they're currently focusing on. They're mainly known for the likes of your Crawford and Vega. So, I mean, the nice thing I'm liking about this business, for example, is that they've been growing quite aggressively, almost double digits year on year. Last year, they were looking around 9% overall group growth. So, I mean, that's one thing I liked about it. We also, looking at the operational margins, which increased by 22.8%, even though they're quite good, currently sitting at gross margin of 50.62%. So the business is doing quite robustly as a whole. They have had a little bit of a shakeup, but that's only in the change in the CEO, which is his last day is anticipated to be the 29th of February. However, they already have a successor in mind, the Mr. White, who's going to be taking over from the 1st of March. And I mean, he has a wealth of experience as well. So, I mean, there is quite a bit to digest there for the business front.
I'm actually going to touch on you a little bit on schools and tertiary campuses, the business model there. And if in my mind, I'm correct to say that it's a model of consistently improving margins, as long as you can get an extra bum on a seat as a student. Because, of course, initially, there's these high fixed building costs and maintenance costs that are initial. But then, Otwa, these are once off, and then you just kind of have to get more students in and you increase fees with time goes, making the model, the private schooling model, if you can get it right, of course, one that is uniquely lucrative.
100%, and as you correctly say, because it's just an initial fee that's required, that's been helping them growing this business model, and that's why they're copying and pasting it also across Africa. I think also if you look at something like Crawford, for example, right, where the business is not only focusing on school and sports, the main focus is the school. So quality education is what they focus on. And I mean, they've been having, as you say, fixed payments or fixed expenditures. However, right now they're seeing an increase in new people coming in or new enrollments, which is what's helping them at the moment.
And then before we move along from this one, we touched briefly on that human resources business. And of course, one might think, well, it's South Africa, the labor market is very strained. But an interesting part of their business is they recruit for oil companies in Africa. It's a very interesting niche business, isn't it, Otwa?
100%. And I mean, if you look at how these I mean, oil is for the likes like your Nigeria, etc. It's a big business in those countries, and to be able to get that sweet spot where you can find the right talent to fill those jobs, it's a very good model. I mean, or strategy for me, I think, to go into that route. Also, they touch on engineering and IT as well. So those qualifications. It, they've taken a lot of the value chain from the schooling, and then they go into also placing you in these different businesses, which I think the relationships they have with those businesses is going to continue its growth, having a great feeder. So you growing the quote unquote product, which is the personnel, and then also putting them in these great businesses.
Very interesting dynamic they have here. Let's talk about Bali equipment now. I mean, we called it spades and shovels, but it's complex spades and complex shovels.
100%. When you think Bell, some tend to think of Caterpillar, where it's these big yellow trucks all over the place. So, I mean, it is a great business. They support not only the mining industry with these equipments, these big machinery, not even equipment, big machinery that they use, and they also supply the agricultural sector. So looking at these two sectors where, right now they're quite valuable, everyone needs to eat, and everyone right now is trying to get, what they can. When you look at resources, we had a nice boom in 2021 and 2022 in the commodity sector, which the business did benefit greatly from that, as people were expanding their businesses, trying to get the most production as well. We also saw in the financial years in 2022, the group revenue rose by a staggering 28%. Reaching 10 billion rands in revenue. So that was great. And then also seeing profits after tax climbing by 63% as well in 2022. So, I mean, the business has been growing quite aggressively.
One of my favorite things about Bali Equipment is that it actually is a family business, which it also tells me that, there's a lot of incentive for the business to be well run and for it to continue to be a generation. In fact, I believe that one of the founder's grandsons is about to come in and take over as CEO. So I'm keen to get your thoughts on this. I may like it as a personal story, but from an investment perspective, it may not be the best thing, actually.
It may not be. I mean, it's always a shakeup when you're bringing in new management into a business. It's always will I mean, especially if I just spoke about the growth that they had. Will the new CEO be able to replicate that success? But again, if you look at that it's a family-run business and everyone is in a tight knit, that gives confidence in a sense that they know how the business goes. They grew up around the business, so in terms of understanding the business, that shouldn't be too much of a far-fetched step. And I think, I mean, it's excellent succession if you think about it in that manner.
Also interesting here is what they've just done there in Richards Bay. What I in my mind, when I think about it, I think of a bit of a Bali equipment town, right? Where they've got all these skills, they've got this huge plant that's going there. And I also wonder, they're manufacturers in South Africa. We know what that's been like, to manufacture anything in a country that can have load shedding for up to 10 hours. But it seems that BAL has managed it quite unscathed.
100%. And the trick that they did is being an international company, they saw the load shedding. They are looking at right now solutions in terms of how to tackle that load shedding. However, the most effective one that they did bring to the table is move the production or majority of it into Germany or in the northern hemisphere. So I mean, that was a very that's what helped them, especially last year, with the many hours of load shedding that we faced, in order to be able to keep, production going, despite the load shedding and South Africa's little problems.
And with that said, it's only valued at around 1.7 billion rand on the JSE. So I guess traditionally known as a small cap, I guess. But is this a company that's undervalued, or is it perfectly valued?
I believe that it's undervalued and I mean, which was one of the reasons why I chose it. I think that it is undervalued and unseen, lack of a better word. And I think more eyes given to the business itself, it would generate more interest, and then you will see with the share price going towards what the value is. But looking at the matrices of the business, they are very strong right now. The share price has been climbing softly, but I am quite uh, in favor of this particular business.
And before we move away from it, Otto, I think what stood out for me when I was just reading on how it performed last year, really strong. Should we see interest rate cuts in the second half of 2024? What we'll see is a lot more cash available for infrastructure projects, for expansion, and Bell Equipment is right there to benefit from that.
Exactly. I think with the hopes of rate cuts this year, I think, a lot of businesses are now looking at what they're going to do with CapEx. So how are they going to use that money to grow the business? And I think they would be well suited, especially as you said, with last year's great performance. This is going to be a great pivot for the business, where they go ahead and expand further, and then also, try and get manufacturing jobs as well in South Africa.
Let's talk about Grindrod now. I call them the company that's at the right place at the right time. Otto, why do you like this counter?
I share your sentiment. They are definitely at the right place at the right time. I mean, you've seen a lot of issues. Just to explain also the business as well. The business is infrastructure. I mean, they do transportation of industry stuff. So you're looking at the likes of material from the mining companies. You're looking at et cetera, et cetera. Now, going back to your story, right place at the right time. Now we're seeing what's happening in the Red Sea. The business is now, we're seeing shipping now moving across to South Africa, and that's obviously demand for the business. We did see a big jump in the business's headline earnings in the interim results of 26% rather. Not only now are we anticipating more on that side, we also look, if you look at what's happening in Mozambique, where they're looking at expansion that side as well. You're looking at that they partnered with Maersk as well in order to handle the situation at the Durban harbors in order to be able to grow the business overall. So I do think right now, being a great business is one thing, but what's also helping them even further is that in this crisis, they are well positioned to be a great business.
Also, what's interesting about Grindrod, of course, it is also an internationally, run business here. And what we are seeing is the rise of Maputo, which I think is super, super interesting here. And Grindrod really being able to take advantage or to bring volumes through Maputo, as well as the other ports in that area in Mozambique. So what it also does, I guess, Otto, is the partnership between Grindrod and that Mozambican government, maybe giving us a blueprint for ourselves here at home.
Okay, so I mean, what there has been an agreement looking to expand the port itself. There's a plan in action for a $2 billion fix or expansion of that particular harbor, which, as you correctly said, they are looking then to get more volumes coming through, and that's where they'll be benefiting from. It is a 25-year expansion plan, so it's not going to happen overnight. However, I mean, expansion is always good for a business. It shows that there is potential for growth, and that's what I think is going to be. That's what's helping the business if you're looking forward.
Another interesting part here, the balance sheet that I would say looks reasonably strong. You are speaking about these big long-term projects. But what a good balance sheet also tells us is that should opportunities arrive in the short term, then the companies can quickly move.
100%. It's that's what you always want to have, is that you want to have a strong balance sheet so you can pivot and do whatever is necessary. And if there are tough times, which we are currently facing, you're also able then to weather the storm and not go down. So I mean, with a strong balance sheet for a business which is looking at very strong growth potential and also the expansion, a strong balance sheet is something you definitely want to have.
And also unseen and undervalued.
And another one.
And then before we,
That is
yes, continue, please continue.
No, it is definitely unseen right now. I mean, a lot of my peers have actually mentioned it a couple of times, but I think that the market hasn't really, taken a full opportunity of it. It's let me just check. The share price is still around 12 rand, so that is opportunity even for your retail investor to try and get into.
Noted, Otto. Otto, I want us to rank these counters from 1 to 3. A retail investor sitting at home keen to get in on any one of them. In which order would you go in?
If I was to pick, I would say first place is ADvTech, and then secondly it's Grindrod, and then last, even not least, but it's Bell Equipment.
Got you. And of course, in our educational segment today, we're speaking about net income. Let's talk about this one.
Yes, I mean, when it comes to net income is a very important factor that you need to look at when you studying a business. The whole thing is that you sell for pennies, and I mean you buy for pennies and sell for dollars. What that means is that whatever you make in is that you want to make a profit at the end, and the net income is basically the profit. It's the money that the business gets to keep outside of the expenses such as staff and cost of goods, etc. So that's net income.
Fantastic, Otto. A pleasure having you on Stock Picks today. Thank you so much for chatting to us. And that was Otto Magweju from Tribe Investments.